Tax season is here. Costly errors can cause a delay in your tax refund or even an IRS audit. For those of you who are locum professionals or business owners, you want to make sure you're filing not only correctly, but on time. In this video podcast, I'm going to be going over the most common tax filing mistakes that you want to avoid and how to avoid them. Welcome to the Locum CPA podcast. My name is Stephen Lee, a CPA specializing in locum medical professionals. Once again, in this video, we're going to go over the biggest tax mistakes that I see and give you simple, actionable steps so help you file with confidence for your 2024 income tax returns. All right. So let's go over mistake number one, choosing the wrong filing status. Many times when a taxpayer or a client chooses the wrong filing status, it's really because they're not fully aware that the filing status that you choose makes a very big difference in terms of which tax brackets you are a part of, as well as what are the income thresholds for certain deductions and credits. So choosing your filing status wisely is extremely important. One question that I get all the time from a married couple is, should I file separately or should I file jointly? And in general, 9 out of 10 times, filing jointly makes the most sense. And the reason I say that is because we all know that the federal income tax rate is progressive. So the more income that you earn, the higher the rate. And the slope of that line, if we were to have an X and Y axis, the higher you get in terms of income, the acceleration of that slope gets faster and faster depending on the filing status. So singles, that slope is very aggressive and goes up very quickly, but married filing jointly goes up the least quickly. So you want to make sure that you're choosing the right filing status and see what you're eligible for. The IRS has an interactive tax assistant that helps you determine what is your filing status. I'll leave that in the information section below, but you want to make sure you're filing with the most beneficial filing status, whether it's single, head of household, whether you're a married couple choosing to file jointly versus separately. And one example is a lot of married couples that are both physicians. One spouse might have very high medical student loans. In that case, and if they're part of an income repayment plan for that loan, it might make sense to file separately. But in most cases, like I said, almost 9 out of 10 cases, you want to file jointly if the goal is to minimize taxes, right? If there's other reasons, then you might want to consider filing separately. So once again, don't choose the wrong filing status. And how to avoid it? Use the IRS's interactive tax assistant, and I'll leave that in the information section below. Mistake number two that I see all the time is missing tax deductions and tax credits. Once again, missing tax deductions and tax credits, right? The reason why missing tax deductions and credits can be very detrimental for your tax return is because they directly help reduce your taxable income or the taxes that you have to end up paying. Remember, tax deductions help reduce the taxable income, while tax credits actually reduce the tax that you pay. So they're both very valuable. And what are some of the most overlooked deductions for locum medical professionals as well as business owners that you want to keep an eye out for? Number one is travel expenses. Things like lodging, mileage, and meals while on assignment. A portion of that can be deductible. Medical licensing and CME costs. Those are stuff that you definitely don't want to leave out from your tax return as a valuable tax deduction. And then retirement contributions, solo 401k, SEP IRA. At this time of the year, if you're filing your 2024 tax return, that's definitely a tax deduction you want to look to see if you're eligible for. Reach out to your CPA or your financial advisor to see if that's possible for your case. Commonly missed tax credits include things like the child tax credit. If you're a parent and you have children that are under the age of 17, you can receive up to $2,000 per child, and a large portion of that $2,000 is refundable. For 2024, the refundable portion is $1,700 per child, so you don't want to miss that, as well as education credits for things like student loans or continuing education. You don't want to miss those types of credits as well. How do you avoid missing these tax deductions or credits? It's all about keeping detailed records and staying organized. Once again, keeping detailed records and staying organized, as well as using a tax professional or a tax software like TurboTax, H&R Block. There's a lot of great tax software out there. You definitely want to look into these because what the software and the tax professional does versus if you're filing on your own is they're going to ask you questions, right? Questions about your filing status, your age, your income, things that credits and deductions that you might not have been aware that you are eligible for. The software as well as the professionals should ask and probably will ask you, are you eligible for these credits or deductions? You don't want to miss those. Mistake number 3 is providing incorrect personal or banking information. Once again, that's providing incorrect personal or banking information. I see this all the time. The reason why it matters is your Social Security and your bank details. Those are vital pieces of information that will potentially delay your tax return if those are filed or submitted incorrectly. Remember, the Social Security number is your ID. The banking details, this is especially important if you are having the taxes that are due auto debited from your bank account, or you are eligible for a tax refund to have them direct deposited into your bank account, right? So you want to make sure that the banking details are correct, and that's the routing number and the account number. Double, triple check that before you hit submit or you file your tax returns. So how do you avoid it? Once again, you review it, right? Your tax return before you file, as well as confirm that your direct deposit details are correct so you avoid any delays in any eligible tax refunds that you might get. And one thing that you definitely have to realize is if you owe taxes and you've selected auto debit to have those taxes debited when you file, let's say on April 15th or March 15th, whenever that date is, if the bank account information is wrong, then the IRS or your state tax authority won't be eligible or won't be allowed to deduct from the proper account. So that means that your tax payment is delayed and will may be subject to penalties and interest, right? For the late payment. You'll get this letter in the mail, say maybe 6 months, even a year later saying that, hey, you never paid your taxes for 2024, pay them now, plus interest and penalties. So you want to avoid that. So double check that bank account information. And the fourth mistake is you're filing too early or too late, right? And why does this matter? Filing too early without all your tax documents and information could result in having to file an amended tax return, right? A redo, an edit of your tax return. That's called an amended tax return. Don't file too early until you're 110% sure that you received all the applicable tax documents that you've got for 2024 or the tax year. Make sure you don't file too early. So a good rule of thumb is wait till at least mid-February, late February, if you're filing your individual tax return, because there are reporting entities, whether it's an employer, a brokerage account, crypto, 1099Ks from Venmo, these different vendors. Sometimes they do send out the 1099 or W-2 or 1098, whatever it is, late. So don't file too early and be too eager. There's still time. So make sure you receive all the information. Filing late is also a big issue that could result in penalties and interest. And I just touched up on that in my previous point, but some key dates for you to remember in 2025. The first one is April 15th, 2025. That is the individual tax filing deadline, April 15, 2025, as well as October 15, 2025. That is the extension deadline for anybody who needs an extension on the April 15th original deadline. And then March 15th and Monday, March 17th is the business return filing deadline. So a lot of you Locum medical professionals have an S corporation, right? Or some of you have partnerships, right? The deadline is going to be Monday, March 17th, 2025 for your 2024 business tax return. Avoiding tax mistakes isn't just about saving time, but it's also about protecting your money and reducing the amount of stress that you receive. So if you found this video helpful, don't forget to give it a thumbs up and to subscribe so you don't miss out on any future great videos for all you Locum medical professionals as well as business owners. Until next time, bye.